In this video, I am not making a prediction. This is a weekend structure review focused on context, not direction. I will begin with the higher time frames, then connect that context to recent session behavior, and finally explain how technical indicators reflect the current structure on the 1 hour and 15-minute charts. From a higher time frame perspective, Bitcoin CME Futures remain inside a capped environment. The monthly and weekly charts no longer show clean directional expansion. Volatility is still present, but follow-through has weakened. This signals a transition from trend behavior into a rotational, mean-reverting regime. On the daily chart, this transition becomes clearer. Price continues to rotate within a defined daily range, with repeated tests of similar high and low zones. Daily volatility exists, but it is being absorbed rather than extended. This is digestion, not continuation. Now let's connect this with recent session behavior. During the Asia session on the 22nd, price broke above the reference candle of the 22nd US session. That move initially suggested short-term strength. However, after that break, price attempted to push toward the reference level of the 20th US session and failed to hold. Following that failure, price was pushed back toward the 23rd US session reference and is currently trading inside the range of the 22nd Asia session. This matters because the 23rd US session reference is not a clean directional level. It overlaps two prior zones. It sits between the upper boundary of the 22nd US session and the lower boundary of the 21st US session. That overlap creates compression. It is a balance zone, not a breakout signal. This session behavior aligns closely with what the indicators are showing. Starting with Bollinger Bands. On the higher time frames, the long-term bands are no longer expanding aggressively. They are flattening and beginning to compress. This indicates that volatility is being absorbed rather than released. On the 1 hour chart, price is oscillating around the mid-band region. There is no sustained acceptance above the upper band and no decisive failure below the lower band. This behavior confirms rotational structure. On the 15-minute chart, the Bollinger Bands expand and contract more rapidly. This shows that activity exists, but without directional commitment. In this context, band expansion reflects movement, not trend confirmation. Looking at moving averages, short-term and medium-term averages are clustered near current price. When moving averages compress like this, they stop acting as directional guides and instead become reaction points. Price responds to them, but does not build structure beyond them. RSI supports the same conclusion. Momentum remains near the mid-range, neither overextended nor collapsing. This indicates that neither buyers nor sellers have sustained control. This is typical behavior inside a balanced, rotational environment. Another important detail is how these indicators align across time frames. When Bollinger Bands, moving averages, and RSI all point toward compression rather than expansion, the probability that lower time frame moves develop into sustained trends decreases. In this type of environment, indicators stop acting as signals and instead act as confirmations of balance. This is why a short-term push on the 15-minute chart can appear aggressive, yet still fail to change the broader structure. Indicators are not contradicting price. They are explaining it. They are showing that volatility is active, but it is being recycled inside existing boundaries. Activity does not equal commitment. It is also important to focus on what has not changed. Despite multiple session transitions, the market has not built acceptance outside of the overlapping reference zone formed by recent US sessions. The 23rd US session reference, positioned between the upper boundary of the 22nd US session and the lower boundary of the 21st US session, continues to act as a compression point. As long as price continues to rotate around this area, expect reactions rather than resolution. This is how balance behaves. It creates movement without progress, and volatility without direction. Until price either accepts cleanly above these overlapping reference zones, or fails decisively below them, lower time frame movement should be interpreted as reaction, not direction. This is a context environment. Structure comes first. Outcome comes later.